This is Alan Bush with ADMIS in the stock index futures. We did see prices come under some pressure in the overnight trade, only to come back to about unchanged on the day near the opening. However, we are seeing some weakness developing, this after the ISM non-manufacturing index coming in much weaker than expected. Also, we have the continuing partial government shutdown as a negative. In addition to this, we are coming up against the 16.7 trillion debt ceiling that will hit on October 17th. So I think the negatives outweigh the positives in this market, at least in the short run. So from here, I would look for lower prices for stock index futures. In the foreign currencies, seeing the euro currency advancing to a new 8-month high against the US dollar. This after better economic data in the Eurozone, including retail sales coming in much better than expected. Also, we are seeing a limited response to some bullish news regarding the Australian dollar. We did have some better than expected Chinese economic data in the overnight trade, and yet the Australian dollar just a little bit better. Also, we continue to feel that the US dollar will continue to weaken as short-term interest rates are pressured. Do have two factors that are likely to continue to weaken the interest rate structure here in the U.S., especially at the short end. First of all, we have the budget situation ongoing as a negative, with the government shutdown slowing the U.S. economy, putting downward pressure on interest rates. Also, it does look like the Fed's quantitative easing program will continue, I believe, longer than many analysts are anticipating. And of course, that would put downward pressure on interest rates here as well. So from here, look for further pressure in the dollar index. And in the interest rate markets, over the last 5 days or so, we have seen the 30-year bond, I would say, underperforming the news in light of this partial government shutdown, which should be bullish the credit markets from a flight to quality point of view. We are not seeing flight to quality streams and inflows coming into that market. So that suggests we are probably near the top of this recovery in the treasuries. From here, I think we can see lower prices, basically because we are underperforming the news and we are up against some major resistance areas. So from here, look for a weaker market today and lower prices longer term for the Treasury futures market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.